Hey guys, welcome back to our channel. I'm Kenya with BK Trading Academy. And in today's video, I just wanted to share with you some really good advice in terms of scalping and give you my opinion on why I feel you should limit your activity in scalping. Now, I know you're probably going to say, but Kenya, you were a great scalper in the early years of your trading, in the early years of my trading, which I still struggled because I didn't have a good grip on risk management. And I find that a lot of other traders don't as well. A lot of traders struggle when it comes to risk management. I think that's the number one downfall for a lot of traders. They know how to make money, they don't know how to keep it, or they don't know how to make money at all. They're constantly giving their profits back. But let me tell you what the issue is with scalping. Now that I have a lot of years under my belt, I've been consistent in trading, have grown a lot of success, and I always want to make sure that I'm being 100% real with you all so that you can also grow, because I know what it's like to feel frustrated, to feel like you're going in circles, you're not getting anywhere. And if someone could have told me this a long time ago, just things to look out for. I also feel that if I had just proper direction, I could have probably saved myself some time and heartache. So I hope that me sharing this with you can just open up your eyes. And if it doesn't today, I think it will in the long term. But let me just kind of share with you my experience. So many of you have been following us. I started out as a scalper, which a lot of you know, and really was good at it. Okay. I still scalp just a little bit, but not very much. I'm more of a swing trader now, and I never thought I would say that. And let me just tell you that when I first started out scalping, it was really hard for me to find my trading style because I wasn't sure if I wanted to do intraday or if I wanted to scalp. I just decided on scalping because I felt like it fit my personality. It also fit my schedule. When you're scalping, you're looking to take advantage of very small fluctuations in the market where you're making quick profits in a short amount of time. However, there are pros and cons to it. There's a lot of pros, but there's also a lot of cons. So most scalpers, they are using bigger position sizes because they're trying to make a lot of money in a short amount of time. So usually you're using slightly higher position sizes than you would, for example, if you were a swing trader, and you're capitalizing off a small movement. So you have to be very good with risk management, or else you can end up making tiny profits, and you make a lot of these tiny profits in small trades. But once you are not disciplined to stick to your risk management, or you have no risk management plan, one loss can wipe out everything. And I know that a lot of you have gone through that because I went through it. And I have not met many successful scalpers, to be honest. The game changer for me came when I started mastering risk management. I found my own technique that was not being taught in the market. And it's just really shocking to me how much risk management is taught at a high level, not really in detailed, broken down. And I do feel that's where we have an advantage. But to be honest, I learned it all on my own. And I can't say that my method fits everyone. I just know that what we do makes sense. And I think it can apply to anybody. Other markets, I'm not sure, but I know that what we do works, and our profits, it proves that. So what I advise to you is that if you are scalping and if you have the time and availability, I think that it's okay to continue to do that. But I want to encourage you to really embrace the longer time frame, the 4 hour and above. I really feel that it is more to your advantage to trade the 4 hour and above chart. If you're going to scalp, I think it's good to maybe go back and learn it later. But if I could do it all over again, I would have learned the higher time frame first. First of all, you get to see the wider picture of the market. You get to see the sexiest levels. Okay, that's what I call it, the best levels to trade from. And so those levels that really stick out to the naked eye. Whereas with the lower time frame, I see traders trading the 1 minute, the 3 minute, 5 minute. Like, guys, that just drives me crazy. It's already stressful enough to trade. So to be on such a lower time frame where it's just a lot of noise and false signals, you're going to experience that often. Now, if you're doing your thing and you're rocking it and you have a good risk management plan, do not let this video discourage you. I'm just more so really talking to new struggling traders, maybe traders who haven't found their style yet. I really want to encourage you guys to embrace the larger time frame. And let me show you an example of why. I'm going to show you a particular trade. Now, let me just also share with you, I have in my MT4 right now tons of trades going. I probably have like 22 positions, and I am not scalping, okay? A really good risk management technique. And I love that right now I can put my phone down, turn away from my computer. I can turn away from the charts for hours in the day because I'm trading from some of the best levels. I'm following my system and I'm just letting the market play out. Now, you might be saying, well, when you swing trade, are you worried about news, or if you're worried about, potential unexpected events? And the answer is sometimes, but not all the time. So when you're trading from the best levels, you really don't have to worry about that, because more than likely the market will return to that area eventually. And if you're using a wide enough stop, you're giving the market enough room to swing. It's just a technique you have to learn. Once you master it and get good at it, you'll know how to handle all of that. If there's news like NFP, FOMC, things like that for USD, for example, I will make sure that I'm aware of that maybe a few days beforehand. So that way, if I want to exit the trade beforehand, I can do that. But let me show you an example of just trading from the higher time frame and finding setups that will allow you to just have some freedom on the chart, which is, I think, best for everyone. And if you want to take advantage of a short-term move while you're in that swing, I think that's the best way to go. So let's take a look. So here's an example of a trade that I'm in right now on GBP AUD. Now, overall, I've had a long bias on this pair. As you can see, the market structure is bullish, where price has been giving us higher highs and also higher lows. So we can see that we have a rising trend, right? And notice that as the price continues to rise, the candles are somewhat slowing down right about here, right? So anytime price is too high, then I'm always looking at very strong supply and demand levels to where I can sell or short. For example, right here, if I just simply draw a line, that sticks out to the naked eye, and look at that perfect swing from there. So if we had shorted that level right there, we could have gotten this for a week, and in a week we would have made 300 and at least 40 pips if we held it back to this previous reversal point, which is right here. So notice here, this is where price action stopped before, and if we simply draw a line moving forward, it stopped in this area again in the future. Price continued to dip a little bit lower. So if you had held it even 2 weeks with a break-even stop loss, you could have gotten at least about 500 pips or so, almost 600 pips, okay? When you're trading on the lower time frame, a lot of traders don't focus on this. And so you're constantly stressing yourself out because you are looking at the chart constantly. You're in and out of trades. You're placing a high volume number of trades, but you're making very tiny profits, okay? With swing trading, it allows you to place a trade on the higher time frame, looking at the overall perspective of the market. So check this out. If we wanted to trade with the trend, we simply find the best levels on this weekly or daily or even the monthly time frame if we wanted to position trade, for example. So look here, notice that this level right here was an area of resistance. We can bring it down even a little bit more. So notice we have a level right here. And then if we bring this over some, you can see that this area also became future support. So you could have possibly gotten a buy somewhere within this area here, right, where you can see the wick rejection here. And look how much price moved to the upside within hundreds of pips. We can find another area as well. I mean, there's all types of swings that I can find on this chart, where even here, look how this area here. So look previously in the past, look at this swing low. Look how much the market moved from this area, hundreds of pips to the upside. When the market came back, broke below it. So look how we had a double top here. The market broke below the neckline, came back and retested it, continued to decline to the downside. But notice when the market came back here, it provided a trading opportunity. So we would have been able to spot this. And then look at this. So look how we were previously in a downtrend, right? Price broke above this resistance here at 1.7823, created a new high. But look how the market came back and retested a little bit right within that area, pushed up, and then you can just see how these levels are respected, right? So had you known this, you could have spotted this as resistance. You could have looked for an opportunity to possibly buy in the future, and look how the trend continued upward. So these are the type of things that you can spot on the higher time frame. Whereas if you're trading the 5-minute, hopefully you would start from at least the daily, marking your levels. So this way, if you're trading off the daily, this is how I like to scalp. I like to find the most convincing levels that stick out to my naked eye on at least the daily time frame. So you can see we have an uptrend here. If I simply just capture this price inside of a channel, which I like to do to just simplify the price action. So let's say there, one thing I noticed is that I do have an area of resistance right here. This became an area of support, and that could have been a buy opportunity to the upside. Now, I also see an area here as well, right above it. So if I do something like this is an area that I see as well too. So notice here, I'm going to even delete this and just notice that if we looked at this previous resistance, so right about here, look how this area became a future area of support. But even after an impulse to the upside, it gave us a flag formation and then a bullish impulse or breakout to the upside. So what I would have done is as I saw this price coming down, I would have looked left, looked at this turning point. And once I saw weakness in this area, I would have traded from this level. So you would have set an alert, you'd wait for price to get there, and then you could scalp from that level. So if I know that I'm swing trading overall and holding a long position to the upside, then I could also maybe place a few scalp positions and close those small scalps out. So that's how I like to trade now. And that's what I would recommend for a lot of you out there as well. So now you can see just from that example of GBP AUD, how we were able to find an awesome high probability trade on the higher time frame. And if we had stayed in that trade, it allows us to just breathe and move away from the chart and have some freedom. To me, that is one of the best ways to trade. I homeschool, I run a business, I have multiple things going on. I do have the time to scalp, but to be honest, it is very stressful. It requires a lot of screen time, and it can be fun while profits are, racking in. But soon as you hit a loss, especially if you have not mastered risk management, it is just not a great feeling. So for that reason, I'm really encouraging a lot of traders to embrace the higher time frames. If you are getting started or you're still growing, you haven't found your true fit yet, I would go to the longer time frame. Okay, so I honestly recommend daily and above. If you want to trade the intraday time frame, like the 8-hour or the 4-hour, I would not go below the 4-hour. If you trade the 4-hour or the 8-hour, do your analysis on the daily time frame, because you're trading within that business day. So you're looking to close out those trades before the end of the business day, for example, if you trade New York session. All right. So guys, I just wanted to share that with you all. I hope that it resonates with you. If you're a new or struggling trader, I want to encourage you to check out the description of this video for everything that we offer. We have an awesome community. I truly believe we have probably the best program in the market. And I might be a little bit biased, but from my experience, I just know there's no one really doing what we do. So anyway, guys, I hope that you find this valuable. Wish you much success in your trading, regardless of where you're learning. And I will see you in the next video. Don't forget to subscribe, like this video, turn on notifications so that you don't miss the next upload. And I'll see you next time. You guys stay blessed.